My name is Richard C. Cook, and my new book is We Hold These Truths, The Hope of Monetary Reform. I want to welcome you to the conclusion of our 6-part video, Credit as a Public Utility, the Solution to the Economic Crisis. We are reaching the end of our journey. In Part 1, we saw how such statesmen as Benjamin Franklin, Thomas Jefferson, Andrew Jackson, and Abraham Lincoln warned against the control of the nation's monetary system by the private banking interests. In Part 2, we examined the ill effects of the Federal Reserve Act of 1913 in privatizing the nation's monetary and credit system. Then in Part 3, we saw how the current economic crisis began due to the abuses within the FIRE economy, FIRE standing for finance, insurance, and real estate. In Part 4, we examined the concept of credit and why credit should be defined as a public utility, not as the banker's private property. In Part 5, we talked about Keynesian economics and how it was a compromise whereby the government tried to finance economic stability by borrowing, but kept the private financial industry as the dominant but destabilizing force in the economy. We also looked at the alternative of monetizing economic appreciation and achieving economic stability through a national dividend. Now, in Part 6, we will look at a more complete description of where we should go from here. The title of Part 6 is The Greenback and National Dividend Solutions. As an introduction to Part 6, I want to read a statement by one of the most enlightened statesmen of modern times, William Mackenzie King of Canada, who died in 1950 and served for 21 years as Canada's Prime Minister. King said, "Until the control of the issue of currency and credit is restored to government and recognized as its most conspicuous and sacred responsibility, all talk of sovereignty and democracy is idle and futile. Once a nation parts with control of its currency and credit, it matters not who makes that nation's laws. Usury, once in control, will wreck any nation." The most important thing to realize is that it's the nature of the private banking system and the fact that debt is the way new money enters into circulation that has caused the current crisis. Our nation has been wrecked by this system, as have others around the world. We have seen again and again how this system concentrates wealth and power in the hands of the very rich through continual cycles of inflation and deflation. Historically, this system, combined with use by government of Keynesian economics, is an attempt to manage modern industrial economies by a medieval relic. Really, the dubious practices of the old gold merchants magnified on the modern world stage. And given the way a Keynesian system uses government debt to finance the military machine, the main reason the U.S. has become a failing imperialist state, drowning in debt, overextended militarily around the world, is the monetary system. The banker's monopoly over the creation of money is the worst kind of privatization. The system is all-pervasive. It determines the actions of every person, everyone, including businesses, individuals, and governments, is in a perpetual rat race to outdistance the debt that comes into existence when the banking system creates money. The system also leads to long-term depreciation of monetary value. It is not surprising that since the Federal Reserve Act was passed in 1913, the U.S. dollar has lost over 95% of its value. Not only does the interest load on money add to prices, but anyone with a product in the marketplace will charge as much as possible to escape his debt or beat out the other players also in debt who are raising prices. Let's not sugarcoat the pill. Our debt-based monetary system results in a death march for the society that has been victimized by it. Today, this is the entire world. Accordingly, the method whereby all the money that enters into circulation is created through bank lending must now be abolished. It must be replaced by a system where money is created by our representative government to support the requirements of the producing economy and the needs of the nation's population. This would mean the use of credit as a public utility. None of the government's current bailout or recovery proposals takes us in this direction. They are all aimed at propping up the bank money monopoly, while the government is going even deeper into debt to create some new jobs. Today, some say the banks should be nationalized, but FDIC can already take over and manage insolvent institutions under existing law. Certainly, as many say, including the Europeans, the banking and financial systems should be re-regulated so that huge amounts of credit are no longer created for speculation, as is done today with equity, hedge, and derivative funds. True, but not even re-regulation would solve the problem. Instead of the patchwork expedients that the Obama administration is counting on through its bailout and economic recovery programs, what will make a difference is if the federal government had the ability to spend money directly into existence without either borrowing it or taxing the population, as was the case with the 19th century greenbacks. Congress could authorize a new issuance of greenback currency today. Greenback-type spending is one of the key provisions of the American Monetary Act, which has been drafted by the American Monetary Institute and supported on the floor of the House of Representatives by Congressman Dennis Kucinich. During the 19th century, the Greenback, Populist, and Democratic parties all supported such monetary reform measures. We need to make greenback currency the #1 political issue again today. Of course, banking apologists would argue that the greenbacks caused inflation, but this is a lie. There is no historical evidence whatsoever that the use of greenbacks versus money that might have been borrowed from the banks ever contributed 1 iota to inflation. In fact, the Civil War resulted in remarkably little inflation, while prices actually deflated through the rest of the 19th century when greenbacks were in use. Well, with the federal government, I worked on public finance for most of my career. During my 21 years with the U.S. Treasury Department, I made a deep study of the history of government finance going back to colonial days and even earlier in English history. I can say without hesitation that the dogma by which the federal government can only raise money through either taxation, borrowing, or fee-for-service is one of the most short-sighted, foolish, and historically inaccurate concepts ever perpetrated. We believe such error because we have a system that was largely put in place through lobbying by the same banking interests that attempted to gain control of our nation when we first broke away from Great Britain over 200 years ago, and finally did so through the Federal Reserve Act of 1913. Greenback funding would put these banking interests back in their proper place.